Hello everyone and welcome to today's session. So today what we are going to do is, today we are going to cover chapter 6, 7 and if time permits then 8. Okay. So we will be discussing in detail chapter 6, 7 and 8. So as we do that, first we will take up a summary of the chapter. We will understand what chapter contains, how it is structured, what essay it are part of that particular chapter, and then we'll go on the question and answers or detail questions for that particular chapter. Meanwhile, if you guys have any doubt at any point in time, you can raise and you can ask your doubts. You can write in the chat box, or if you are on the portal, I would suggest to join the Zoom link and and write your questions, and you will also get a chance to ask your questions during the end of the section. Okay, so let's continue. So today let's start with the chapter 6. Now, what chapter 6 contains? What is chapter 6 about? Chapter 6, when we refer to completion and review of the audit. Okay, so you guys might have already seen the lectures which are uploaded on the portal for the chapter 6, where I have discussed in detail about the chapter 6, the essay it covers. But apart from that, when I talk about completion, okay, it talks about some important steps that are performed at the time of completion of audit and the review that is performed for the completion of audit. So usually what we do is, when we complete the audit or when we are near to the completion, we check some key areas. For example, my going concern, related party transaction, and most specifically, you can say subsequent events, because that you check after once the financial year closes, you check for the subsequent events and you obtain written representations. Okay, so this is something we do at the end of the audit, obtaining written representations, subsequent event verification, going concern reviews, and we review these areas in detail before we close our audit. So in this chapter also, we will be understanding SA 560, 570, 580, that is subsequent events, going concern, and written representation. Okay, so we will be understanding with much more detail. I will provide you the summary in a very good chart format, and then we'll move to the questions. So let's move to the first one, SA 560, subsequent events. So what SA 560 is about? Now, auditor's responsibility with respect to SA 560, or I would say with respect to the subsequent events, is to first of all, identify whether are there any subsequent events that relate to the audit of financial statement. If yes, then whether have we obtained any information about those events. Now, when I talk about subsequent events, they are divided into segments. One, let's come here. So I'll just provide you some summary and brief on that. So when I talk about subsequent events, let's say I'll draw a timeline for you guys. Let's say this is the timeline. Now, this is where my financial year end close. Okay, let's say 31st March 24. Okay, financial year closing. So at this date, I closed my financial year. Now, there is another date. There is another date which is very important when it comes to the financial statement. That is the date of audit report. The date when I issue an audit report. And the third one is the date when I issue FS, or it is I publicize the FS in the market, or the financial statement are issued to their users. Okay, date of audit report and date of issuance of financial statement. Now, understand one thing. So, from the date of financial year close till the date of audit report, if any events happens, okay, if any events happen which requires an adjustment, so for this particular period, if any adjusting event occurs during this period, if any adjusting event occurs for which an adjustment is required in your financial statement, then yes, it's a responsibility of the auditor to obtain sufficient and appropriate audit evidence. Again, understand. So during this period, let's say for example, any major event happened. For example, fire, or amalgamation, or changes in business structure, very sale of a division. A lot of things can happen. But if that has happened, in that case, we are as an auditor required to obtain sufficient and appropriate audit evidence. Okay. Any doubt till now? No? So, if that is the case between the events occurring between the financial year close and audit report. Now, what about the events that are occurring after the date of audit report, but before the date of issuance of financial statement? Now, from here to here. So, audit report is being issued, but financial audit report has been signed, but financial statements have not been issued. What should be done in that case? Can anyone tell me? If you have seen the lectures, can anyone tell me what should be done in this case? Anyone? Okay. Rakesh, disclosure. Anyone else? Nilabjo, what should be done if you what is the responsibility of the auditor for these events? So my question is, what is the responsibility of auditor for these events? What is the responsibility of auditor? Okay, Abrakesh, to ensure that if it is material, then it has been disclosed or not. Good. What else? Not to issue FS to third parties. Okay, Nilabjo, good. Anyone else? What else could be done here? Think. After the issue, you have signed your audit report. Audit report has been signed, but FS is yet to be issued. Sorry. FS is yet to be issued. What should be done? I'll tell you. Now, for this particular part, okay, here, for this particular period, what is the responsibility of the auditor? Auditor has no obligation. First of all, understand that auditor has no obligation to perform any audit procedures. To perform any audit procedures. Auditor has no obligation to perform any audit procedures over here. As a result, if auditor has no obligation, then identifying it's a different story. Now, if still auditor comes to know about any event from or auditor comes to know about any event through any other channel or through any other person or through any other mode, okay, which is an adjusting event, and the fact becomes known to the auditor after the issuance of audit report, which might have, if known earlier, might have caused auditor to amend the audit report. Understand the part here that if that event known earlier to auditor, let's say for example, any big fraud happened, okay, so very big fraud happened, but that is something I came to know after issuance of my audit report. So now this big fraud that has happened, now if I would have known earlier before issuing my audit report, I would have qualified or issued an adverse report, okay. Now if this event is of such nature that if known earlier, it would have amended or changed my audit report, okay. If that event known earlier to auditor, then that may have caused the auditor to amend the AR. In that case, now I call this, for my own understanding, I call this significant event. Or you can call it adjusting event. Okay. Now, significant event or adjusting event is such an event that if I would have known it earlier as an auditor, if I would have known it earlier, then I would have, might have, amended my audit report. Like a fraud. If I known it earlier, then I would have, issued a qualified or adverse opinion. Now, if this significant event, I would have known it earlier, then story would be different. Okay. So that's why this becomes a significant or adjusting event. Now, for these kind of events only, I'm required to perform some procedures. Required to perform procedures, otherwise not. Otherwise, I am not required to perform any procedure. No further procedures are required to be performed. Clear? Any doubt till now? So I am not required to identify all events after the date of audit report. I hope it is clear, Nilabjo. I am not required to identify all the events after the date of audit report. There is no obligation on me. But if something still, like I come to know something still, okay, through any other sources, although I don't have any obligation to perform audit procedures, but still I come to know about something, and which is such a significant that it would have caused me to amend my audit report earlier, if known earlier, then only I will perform procedures. Very important point to understand. Clear? Any doubt till now? Any doubt? No? Okay. If things happen after the issue of audit report, then auditor has no obligation. Correct. Yes, Nilabjo. Now let's proceed further for the events that are even occurring after the date of issuance of financial statement. Means now financial statement are already issued in the market or to the users. For this particular portion, what do you think? What is the responsibility of the auditor? Come on. Facts. Now, what do you think? What is the responsibility of the auditor for these events, like occurring after the issuance of financial statement to the stakeholders? What do you think? What do you think, guys? To ensure that it will be disclosed in the FS of next year. Okay, Abrakesh. Now, first, what is the responsibility of the auditor pertaining to all events? Let's say, for example, if some events are happening after the issuance of financial statement, now what is the responsibility of auditor over there? Discuss with those charged with governance as per SA 260. Okay, Nilabjo. Abrakesh, as such, nothing. Come on, guys. Viraj, come on. So, what do you think is the responsibility of auditor? Okay, for all the events that are identified after the date of issuance of financial statement. So, what is the responsibility of auditor? Ask management to inform third parties receiving the FS. Okay, I'll give an example with the dates and then you tell me. Now, see, date of audit report. Okay, so let's put into the perspective of dates and then we will discuss. Now, date when financial year closed was 31/3/24. Date when audit report was issued was 35/24. Date of when audit report was signed. Date of issuance of FS in the to the various stakeholders. Let's say 36/24. Okay, and there is some event which is happening on 39/24. Now there is some event, major event you call it. which is happening on 39/24, which is after the date of issuance of financial statement. What should be done for this major event? Very good, Viraj. Yes. Anyone? I'm talking about this major event. Or for example, fire happened. Anyone? No? Absolutely yes, Viraj. Abrakesh, yes. So, see, first of all, understand that I am not going to cover as an auditor all events occurring after the date of financial statement issuance. I don't have any obligation per se. Okay. And why? Reason because these events may happen. Okay. Like after the date of issuance of financial statement, it can go forever. So till how much time I will check for the events, first of all. So there is no end after the date of issuance of financial statement. It is the next year. Number two, for the events that are occurring after the date of financial statement, are they related to previous year? First of all, are they related to any such thing for which I had an indication in the previous year? Do they relate to previous year, first of all? So there are two things. First, as an auditor, I have no obligation. So auditor has no obligation to verify or to perform any procedures. Now, the second question comes is, till I come to know about the event, which is a significant event. Now, significant event, still I come to know about a significant event. In that case, I need to first understand whether this, when I talk about significant event, means that has some linkage to the period, before my financial statement close, or to such things which is pertaining to previous year. So I have linkage to my previous year. If that event doesn't has a linkage to the previous year, then why I would go and amend my previous year audit report? By that logic, you would ask me to amend 3 years before audit report also. But that is not correct. Are you getting my point? So, if that is a significant event which has a linkage to any of the things in the previous year, which is significant. Significant means that if I would have known it earlier, then I would have amended my audit report. That would have caused me to amend my audit report. Okay. Now, fire happened in the current year. How can I know it earlier? Not possible. So it doesn't have a linkage to my previous year. So first of all, to identify, first you need to identify whether it has any linkage to call it as a significant event. If yes, then only I am required to perform some procedures. Otherwise, not. Absolutely correct, Nilabjo. Like bad debt happening, or huge bad debt causing a going concern issue for which there was already an indication. heavy lawsuits for which there was already an indication, but earthquake, fire, any such event which is post related to the post issuance of financial statement. No, I'm not going to take into my financial statements. Clear? Any doubt till now? How to look for the events? Like for what period? What is the auditor's responsibility? But even Abrakesh, in case of a contingent liability, you do assessment of a provision. Okay. Now, when you do a assessment of a provision, whether like see, at the end of the year, I reassess all my contingent liabilities, whether they are contingent or they require a provision. Okay. So if they require a provision, then I am required to make a provision. But now when I call it as significant, like for example, let's say in your case, like a contingent liability. Now, if I have a contingent liability for which I did not take a provision because of XYZ reason, XYZ reason, and after the issuance of my audit report or financial statement, the lawsuit got finally closed and it was unfavorable for me. As in company, it was unfavorable for me. Now, as an auditor, first of all, I'm not only required to amend the audit report, but I need to understand where my provision was wrong. What was the issue with respect to the provision that, assessment that I did? I did some provision assessment earlier and where it went wrong. So that is also something you need to understand. And on the basis of that, okay, what information was received, whether it was, appropriate at that point in time, we need to understand. It could not be the case that, I am rectifying everything because of, I know information right now, applying the concept of hindsight. Like, I know everything as of today, but at that point in time, whatever decisions I have taken, whether they were appropriate with respect to the circumstances or the information that was available, I need to consider that also. Okay. Any other doubt? Nilabjo, you can join the live Zoom link and be part of the session also through Zoom if you think your queries are reaching late. Any doubt till now? Okay. If no doubts, then let's proceed to understand few things about the procedures that we are required to perform. So we understood about the events occurring between the date of financial statement audit report, after the date of audit report, but before issuance of financial statement, after issuance of financial statement in a timeline way. Okay. Now we understood what is the responsibility of the auditor. Now, for the date of financial statement, before the issuance of audit report and financial statement, yes, we are required to perform audit procedures for all events that require adjustment. Again, now that is a very important part that require adjustment if they have some linkage to the previous year. Okay. And if you auditor have already done some testing with respect to the certain areas, okay, in that case, auditor is not expected to test again. So for example, if I already done a testing, let's say I have already taken the confirmation from the customer till 30th of June or 30th of May when I was rolling out the actual confirmation. So financial year got closed on 31st March. I started my audit, and during the course of audit, I asked, okay, customer, do one thing. You give me confirmation till date, till today. So I'm covering almost, the period till the date of audit report in that confirmation. So I'm not required to perform any other procedure again. Okay. So if you have done that some procedures which is already giving you a comfort, then perfectly fine. Another example. Can someone give me of such an example that you are already checking, events before the date of audit report, but after the financial year close? So I'm asking any audit procedure that you do which is checking events in this particular phase after the financial year close, but before the date of audit report. Here, anyone? No, like procedures that you are already doing to get some comfort. Yes, litigations. Very good, Nilabjo. So for litigations, I already checked what is the current status as on today. What has happened, what has not happened. I understand all the progress. Let's say, for example, litigation in the income tax, I understand, okay, where we are as of today, whether it's in the CIT appeals, ITAT, what we have submitted, what we have not. We understand that case detail in much more detailed way. Are you getting my point? For litigations, you do that already. So you are not required to perform the same procedure again. One more area, and might not, might not be applicable for all, but we are performing inventory count after financial year close, because we were not able to perform earlier on the date of financial year close. Let's say you were not able to perform on the last day of the financial year the inventory count, but now you choose to perform on, let's say, 35/24, and then you will perform the rollback procedures. So by performing inventory count on any date after the financial year close and then performing the rollback procedures will already give you a comfort with respect to the events that have happened before the date of assigning of audit report and the financial statement close. Are you getting my point? Okay. So in that case, auditor is not expected to perform any additional audit procedures, because if he is performing the same, you need to obtain understanding of the procedures that management is performing. Okay. In like, what management is doing to ensure that all events are captured. You need to inquire with those charged with governance. Okay, what events have happened, what not has happened, or understand the events that might be significant. Then you need to read minutes of the meetings. Various meetings are there. Read entities last financial statement or subsequent or interim financial statement. Let's say I'm going to issue my audit report on 30th June. I might be having 30th June, what do you say, financial draft financial statement at least ready with me. Or if you are issuing audit report after 30th June, then you might have a signed limited review report for that particular period. So you can read that also. Those charged with governance, Abrakesh. So TCWG means those charged with governance. One more thing, in exam, you are required to write the full terms, not the abbreviations. I might have used some abbreviations over here. Okay, DOAR, DOFR, or DOFS. But in exam, when it comes to exam, you are required to write the full terms, not the abbreviations. This is just for your understanding purpose. What is rollback? Rollback procedures are procedures kind of, which take you to the particular date of a financial statement. For example, in this case, inventory count. If I'm performing inventory count, let's say in May, so I will perform some procedures like, deducting the purchases for that May month or April month till May month, adding back the sales, whatever is done till the month of May, and getting the closing balance as on March. So that is, I am rolling back my balance to the March because I have performed some procedures after the financial year close. So that's the rollback procedure. Any doubt till now? Again, as I told you, auditor has no obligations for event occurring after date of audit report, but before issuance of FS. Same with the events occurring after the issuance of FS. If anything comes to know, like if anything comes to my knowledge as an auditor, then I need to check whether it's a significant event, has any linkage to previous year. If yes, then discuss the matter with management, determine whether FS need amendment, inquire how management is, looking for that particular event, how they are, recording that event, whether they are going to amend their financial statement, what is the step management is taking out. Okay. If management is amending the financial statement, then carry out the procedures subject to that amendment. Okay. Provide new auditors report or the amended auditors report by just mentioning the date over there on the same audit report that it has been amendment subject to this particular area, and understand what is the requirement of applicable financial reporting framework when it comes to the amending the financial statement and amending the audit report both. Clear? And then you obtain return representation. Any doubt with SA 560 till now? Abrakesh, can you just explain your query a bit? No, SA 560 is applicable to all, not only to bank and insurance companies, to all. It's a audit. See, SAs are applicable to all audits, like audit of a financial statement. When you do a audit of a financial statement, general purpose financial statement, it is applicable to that. Any doubts? No? Okay. So the next important essay that we need to take is essay 570 going concern. Okay. So first of all, understand what is the responsibility of the auditor when it comes to the going concern. So the responsibility of the auditor is to understand or to analyze the implication of the going concern on the auditor's report. Okay, means auditor has to obtain sufficient and appropriate audit evidence regarding whether the use of going concern assumption by the management or going concern basis of accounting by the management is appropriate or not. Basically, to check whether the entity is going to be in business, the going concern exists, the going concern assumption exists. Okay, so auditor has to obtain sufficient and appropriate audit evidence regarding the appropriateness of management use of going concern basis of accounting. and and to conclude, once I obtain the evidence, obtain and conclude, okay, based on sufficient and appropriate audit evidence, conclude whether whether there is a material uncertainty exist related to the events or conditions that may cast significant doubt on the entity's ability to continue as a going concern. Very big term. I'll break it down, and this is very important term. Whether a material uncertainty exists related to events and condition that may cast significant doubt on the entity's ability to continue as a going concern. Why I'm writing this big sentence? Reason because there are few terms that I want to highlight and make you understand. That is very important. First is material uncertainty. Second is the events and conditions that may cast a significant doubt. And third one is the entity's ability to continue as a going concern. Okay, so first is this one, material uncertainty. Can anyone tell me what is material uncertainty mean? What do you mean by material uncertainty? Anyone? You might have seen already my lectures. What do you mean by material uncertainty? No? Okay, the event that relate to continuation, like application of application in for the insolvency. Okay, good. Anyone else? What do you mean by material uncertainty? Very important. That's the base I'm talking about. Otherwise, you will not be able to understand the particular standard in detail. Okay, I'll tell you. Now, material uncertainty is a kind of a scenario when an event or a combination of event is of such nature, like it has a magnitude of impact, potential impact, likelihood of occurrence is such that, okay, that in auditor's judgment, appropriate disclosure is necessary. It has an implication on the financial statement. So it is of such nature that it has a magnitude of impact plus likelihood of occurrence. Magnitude of impact, likelihood of occurrence. That's the, in auditor judgment that it requires a disclosure. Now, when I talk about events and conditions that may cause significant doubt, okay. So let's say, for example, there is an issue. Kind of, you can say there is a dispute going on with one of the vendors. Now, alone that event might not impact or cause significant doubt on entity's ability to continue as a going concern. That is perfectly fine because it's a small dispute going on with a vendor. Now, if you club that dispute with the other disputes which are going on with other vendors, let's say you have a 2000 disputes, okay, which is a high chance of unfavorable outcome, and this will, okay, may trigger insolvency. 2,000 disputes, high chance that a favorable outcome will come. And that may trigger insolvency. Now individually, if you see that event, it is not that much impactful, but together with the 2,000 disputes together, they may cast, now these, they may cast significant doubt. Correct? They may cast significant doubt, because if there is a high chance of unfavorable things, and if unfavorable happens, then it will become difficult for the company, it will trigger insolvency. So means there are events and conditions that may cast significant doubt on the entity's ability to continue as a going concern. If I add something to this, if I add high likelihood plus magnitude, then it becomes material uncertainty. So this particular portion, events and conditions that may cause significant doubt, it's an uncertainty, but I am just making it material uncertainty when it becomes more likelihood, it has more likelihood and more magnitude. Understand, this particular your term over here is already uncertainty. This is already uncertainty. But when you add materiality to that, it becomes material uncertainty. And material uncertainty relating to some events that are already casting significant doubt on entity's ability to continue as a going concern. Okay, that is a point where auditor has to perform some procedures. If auditor identify that there are events and conditions that may cast significant doubt on the entity's ability to continue as a going concern, so auditor first has to check, okay, uncertainty is there, perfectly fine, whether it is material uncertainty or not. If yes, then whether based on the material uncertainty is use of going concern assumption of accounting is proper or not. So first you identify the uncertainty, then you check for material uncertainty, then you check for going concern assumption. That is a proper flow that is required to be carried. Are you getting my point? So people think that, okay, material uncertainty or events and conditions that may cast significant doubt on the entity's ability to continue as a going concern is everything is same. Just we are expanding the words and adding more words and making the sentence bigger. No, it's not. Understand that thing. We are not making a sentence bigger by adding additional words. No. In exam also, you are required to write in this way only, that events and conditions that may cast a significant doubt on the entity's ability to continue as a going concern is one particular uncertainty I'm talking about. When that uncertainty becomes material, it becomes material uncertainty. And the responsibility of the auditor is to check whether a material uncertainty exists related to certainties which are already there, uncertainties which are already there. Means related to events and conditions that may cause significant doubts on the entity's ability to continue as a going concern. Are you getting my point? Now, a simple question. Can there be a scenario where I say, okay, there are events, there are conditions that may cast significant doubt on entity's ability to continue as a going concern, but there is no material uncertainty. Again, understand my question. I am saying there are events, there are conditions that may cast significant doubt on the entity's ability to continue as a going concern, but there is no material uncertainty. Can I say that? Yes, no. Come on, guys. Okay, Abrakesh, good. Nilabjo, it will go. No, it will be material uncertainty. So events are also there, material uncertainty is also there in that case. Or rather, in your case, I will direct, ask them to apply for the provision, and I may say that use of going concern accounting assumption is not appropriate. If that is a big fire and insurance is not there, and I know it's a very big issue now, I may call, use of going concern basis of accounting incorrect in that case. I'll tell you. With the same example, this dispute one. See, guys, if I have a dispute, okay, if the dispute is there, now only I have this one, like 2000 dispute, but they don't have high chance favorable outcome, or they might not trigger insolvency when they occur. I don't have a high chance of favorable outcome. I don't have a condition that they may trigger insolvency, because there is no high chance of favorable outcome. In that case, 2000 disputes are the events and conditions that may cast significant doubt, because there are still litigations going on. And I am just making an estimate that, okay, it will have a favorable outcome, but I don't know the actual outcome. That's why they are uncertainties, because I don't know what will be the outcome of those 2000 disputes. But they are not material, because either I am saying the likelihood is not that much, or the magnitude is not that much. Let's say might be magnitude be there. Let's say if this happens, then it may trigger insolvency. For a time being, I understand it may trigger insolvency. But I think the likelihood is not there. That the favorable chance or chance of favorable outcome is not there. That's why in that case, I will say, yes, there are events, there are conditions that are casting significant doubt on the entity's ability to continue as a going concern, but there is no material uncertainty. Are you guys with me? Any doubts till now with respect to this particular term? This is a base that we need to understand. Any doubt? No? So, in all the cases, when events and conditions are identified, what is required to be done? So, when events and conditions like the uncertainty I was talking about are identified, request management first of all. Okay, management, how have you dealt with this? You understand what is the material uncertainty, whether material uncertainty is there or not, or only events are there. Evaluate management's plan of future actions. For example, I have a 2000 disputes. I went to management. Management, it appears to be uncertainty, material uncertainty. What is your plan? So management is saying that, okay, I have a third party insurance. Now, if they have a third party insurance, then directly it is impacting my magnitude because everything is insured. Management is not required to pay any penny out of that. Matter over. There are events, there are conditions, but there is no material uncertainty. I will analyze the cash flow statement, accuracy, completeness, and relevance of the data that is being given to me, and accordingly I will decide. Now, if the use of going concern basis is inappropriate and management has still used, then I will qualify or rather issue an adverse opinion. Okay. But if there is a material uncertainty, see, it may happen that, okay, the use of going concern assumption is appropriate, but there is a material uncertainty. So there are litigations which could result into, insolvency at a later point in time if they become unfavorable. And there is a high chance of unfavorability. So there is a material uncertainty. Now the point is, can I say based on that material uncertainty, as on today, that use of going concern is inappropriate? Answer is no. I cannot. The use of going concern is appropriate as on today because I don't have a confirmation that my entity is going to go in insolvency or bankruptcy. I don't have a confirmation as on today that my entity will go bankrupt. And these all cases are against me. So outcome has came against me. As of today, I don't have that evidence. So I will say the use of going concern assumption is appropriate, although there is a material uncertainty. For that, appropriate disclosures are required in the financial statement. And if management has not made those appropriate disclosures, then you can issue qualification and adverse opinion. And if there are only conditions and events that are casting significant doubt about entity's ability to continue as a going concern, in that case, you need to understand whether material uncertainty is there or not. If not, still check what is the requirement of your applicable financial reporting framework to report such kind of events. Like whether we are required to report in contingent liability, whether we are required to report in audit report or any other paragraph. So what is the requirement of applicable financial reporting framework in that case? Clear with me? Any doubt? This was the summary of SA 570 going concern. Any doubt? Guys, it is very, very necessary to understand the difference between material uncertainty, events and conditions that may cause significant doubt. They both are different. And third one is use of going concern assumption. Okay. So all three are different, not the same. So when you are writing an exam, you need to make sure what you are writing. Okay. And the last one, it will not take much of a time, is SA 580. And then we'll move to the questions. SA 580 is about written representations. So we are required to obtain written representation from management, okay, for a lot of matters, which is already contained in relevant essays. So based on those essays, we are required to obtain written representation. But what if we have a doubt about the reliability of the written representation? Means you already have certain evidence in your hand which is creating doubts about that written representation. In that case, you need to check it with the other audit evidence. You need to go and consider the other audit evidence that you have in your hand, reevaluate the integrity of the management. Okay. Take appropriate actions in determining the reliability of that written representation. For example, management has said, management confirmed that there is no litigation during the year. And you identify there are 2,000 litigations going on with vendors. So there is an issue of reliability. You need to consider that issue on the other written representations also that has been provided to you. whether they are reliable or not. What other evidence you have in your hand. So based on that, you need to, check the written representations submitted to you, other representations submitted to you, and their reliability. And if you don't have the sufficient and appropriate audit evidence and your written representation, you cannot rely upon the written representations, then you need to consider the impact on your audit report or audit opinion. So it's pretty much simple. There is nothing much in this particular essay. Essay 580 written representations. Any doubt till now? Okay, Abrakesh. Nilabjo, any doubt? Sorry. No? No doubts? If no doubt, then I have a very good question to cover on this particular part. Let's see that question. So there is a series of questions pertaining to one particular case study. Let's understand that. So question is kind of a case study based. Opal Stones Private Limited is a renowned brand dealing in rare earth and precious stones. Management of Opal Stones Private Limited hired an expert to value their inventory of rare and precious stones. The company had the following stock of gemstones. So these are the gemstones and this is a particular stock. Unlike last year when expert valuation was adopted, this year management decided to value inventory of gemstones as per the rate decided by them, which was based on the fair market value calculated by the management. The rates calculated by the expert were based on average rate fetched by the various companies in the industry in past 3 years for the sales of the same kind of gemstone. Okay, so management is using fair market value calculated by management, but expert was using average rates fetched by the various companies in industry in past year for sale of same kind of gemstone. Mr. Akash, an audit executive from audit team, inquired with management with respect to rationale behind not accepting the valuation done by the management's expert. Management explained that the estimated value per carat is based on the market value that they can fetch. Mr. Akash requested management to provide supporting documentation for the same. However, management could not provide any documentation to support the valuation. Management further explained that these are the assumptions which do not have any supporting documentation, and without these assumptions, one cannot value these gemstones as there is no standard methodology to value them. Okay. Now, the question is, so, yeah. So the question is that in Mr. Pramod, a customer of Opal Stones, filed a criminal suit against the management of Opal Stone on account of selling fake gemstones worth of 65 crores to him in FY 22-23. Mr. Pramod shared the forensic test report carried out by the authorized government laboratory of the fake gemstone that with those charged with governance and auditor of the company. Upon receiving the report, the audit team hired a third-party independent expert to test the inventory on hand. Upon testing, it was identified that the 90% of the inventory of the gemstone was fake, amounting to 55 crores of book value. The outstanding loan from the banks and financial institution was 25 crores as of 31st March 2023, and the annual turnover of company was 75 crores and 87 crores for in FY 21-22 and 22-23. Now, kindly explain how will you report the said fraud in the audit report, and also explain the reporting of fraud required to be done in other audit report. So first of all, Let's understand the impact of the event. So how will you report this event in your audit report? So this is a combination of essay we have already dealt with and the today what we discussed. How will you deal with this particular scenario? Come on, guys. How will you deal with this particular scenario? Qualify the report with steps. Okay. What else? So two things you need to answer. Number one, how will you deal the matter in the audit report, or is there any other requirement of reporting other than the audit report? So is there any other requirement of reporting other than the audit report? If yes, then where? And how will you report the matter in the audit report? Come on, guys. Abrakesh, representation in AGM. I don't think so. Representation in AGM is something, will be part of other reporting. Representation in AGM is already, done through your audit report. So that will be covered by the audit report. Anything else? Any answer, guys? Any answer? I would like to hear. Nilabjo, come on, guys, quickly. So where will you report other than the audit report? And in audit report, how will you disclose this particular matter? Okay, I'll tell you. See, first of all, there are two things over here. One, when you are reporting in your audit report, and second, when you are reporting other than the audit report. So when it comes to the audit report, it's not only the qualification that I am required to see as per SA 705, but there is one more essay which will come into picture, that is SA 570, and I'll tell you why. Reason, because the fraud over here is of 65 crores. Okay, this is the amount that we are looking at, the fraud amount, 65 crores. Plus, if you see the annual turnover of the company, 75 or 85 crores, means if this is a fraud, then this could impact my going concern. Now this will be a litigation. Now this litigation might have a material uncertainty, and material uncertainty might create an issue for going concern. Are you getting my point? So this particular event of a fraud is kind of uncertainty. Plus it has a likelihood and magnitude. So this becomes material uncertainty. Now my question to management will be, management, how you are going to deal with this material uncertainty? Do you have funds to pay this? Do you have some arrangement to discharge a liability that might arise in the case of selling fake gemstone? If management says yes, we do have funds, we do have a support from group company, we do have a third party insurance, or it was not, this fraud is not done by us but some by employee, so we will make employee more accountable. It is not the responsibility of the company. So by understanding the situation, I may decide whether yes, going concern assumption is there or not. If going concern is appropriate, means use of going concern assumption is appropriate, then I may check only whether the material uncertainty has been disclosed in the financial statement or not, or I will disclose in a separate paragraph in my audit report for pertaining to that material uncertainty. But if I see that, okay, management has no backup, management is not in position even to, deal with this particular kind of scenario, in that case, I may call that use of going concern basis of accounting is not appropriate. And if management use that basis of accounting, then I may call if I may issue a adverse opinion. And then SA 705 will come. Understand that point. How management is disclosing this fraud, what is the impact on the going concern basis, and how and what reporting is done by the auditor. All these together, are linked. Now, this was with respect to the audit report. Apart from audit report, most of you guys forget about SA 260. It is responsibility of the auditor also to report to those charged with governance and understand and inquire with that. Okay, those charged with governance, tell us that what you are going to do and what you have done in past. How this can happen. So SA 260 places a responsibility on the auditor also to discuss the matter with those charged with governance of such kind of matters. So other than the audit report, reporting will be there. Are you getting my point? Plus, there could be reporting with respect, there is a reporting with respect to company set, TARO, and all those things are there, but I'm not going into in that detail as of now, because that is something yet to be covered in, subsequent lectures. Any doubt on this? Any doubt on this? Okay, no doubts. Then let's go to the next question. Again, a good one. In continuation of the same only. Now the question is, in the above question, the audit team has identified events and conditions that cast significant doubt on entity's ability to continue as a going concern. When the audit team presented the events to the partner, the audit partner requested the audit team to obtain sufficient appropriate audit evidence to determine whether or not a material uncertainty exists related to the events and conditions that may cast a significant doubt on entity's ability to continue as a going concern through performing additional audit procedure. Kindly guide the audit team with respect to examples of additional audit procedures that can be performed. See, in case of a fraud, Abrakesh, you might obtain management representation, but how much comfort it will give you, that's a very big question, because it's a fraud. Who were involved in the fraud? What if the management is involved in the fraud? Still, will you go and obtain the return representation from management? So you need to understand the dynamics of the particular situation, and then accordingly you need to, think whether I can rely upon the management representation or should I take one or not. So come on, guys. In this question, kindly guide the audit team with respect to the examples of the additional audit procedures that they need to perform to understand whether there is a material uncertainty exists or not. Just now discussed that you need to provide the answer. We discussed just now. Come on, guys. We have discussed just now this one. Nilabjo, Rakesh, what could be the procedures, additional procedures that a team can perform? Any additional procedures that the team can perform or team should perform? See, we discussed just now. I will understand what is the management plan available in their hand. Like, I will ask them, do you have any kind of insurance for such kind of scenarios? What is the cash flow of the company? Do you think you will have enough cash to pay the liability if something happens? The case, the person files a case and asks for a recovery. Okay. Do you have any loan agreements or any such thing, which can result into, kind of a problem for you? For example, there are certain loan agreements or debentures, and they have a condition like if any fraud is identified in the company, you will immediately pay back all the amount to the debentures or the loan, to the borrowers. So, do you have any such kind of loans which may result in additional burden on you because of the conditions and the covenants in those loans agreements? You may go and check the meeting minutes. Okay, you may ask the legal counsel, external or internal, for the company. What could be the liability in this particular situation? You will ask, okay, do you have some plans, future plans? For example, okay, you don't have a cash now, but do you have any plan to generate cash in future that you will use to pay it here? Okay, like what are the are you going to take any loan for this? Do you have a credibility in the market after this particular fraud? Can you obtain further loan? So there are a lot many things that I will go through, okay, additional procedures, to understand how management is dealing with this kind of situation, how management is ensuring that, okay, whether material uncertainty exists or not. Clear? Any doubt till now on this one? So as I was saying, discussing the cash flow, entities latest available financial interim financial statement, debenture and loan agreements, minutes of meeting, legal counsel. Then what could be the issue, like financial support if there is any. Okay, it plans to deal with the unfiled customer orders. Like if you have a future orders in your end, how do you will deal with that? Regulatory actions, if there will be any. Do you have an adequacy of the borrowing facilities? Like for example, are you in a position to take additional borrowing to pay these liabilities or these kind of scenarios? So all these things we will evaluate. We'll perform these additional procedures to understand the management's position on this. Any doubt till now? Okay, Rakesh. No doubt. If no, then let's proceed to the next question. After signing the audit report of ABC Limited for financial year 2021, but before issuance of financial statement by the management. So audit report is signed, but your financial statement are yet to be issued. The auditor of ABC Limited identified that the management misappropriated the loan funds raised by them for expansion by transferring them into their subsidiaries. As a result, there was a breach of loan covenant, because of which the consortium of banks decided to revoke the loans facility of ABC Limited, and issued a demand notice for immediate payment of all the outstanding amount. The auditor of ABC Limited was not able to identify the issue earlier because of the falsification of the bank documents by the management. The loan amount was material for the financial statement as a whole. If this information was available to the auditor before signing the audit report, then the auditor would have qualified his opinion. Moreover, after identifying this information, the auditor inquired with the management as to why this information was kept hidden and requested management to amend the financial statements by disclosing the breach of the loan covenant appropriately as per the applicable financial reporting framework. However, management contended that once audit report is signed by the auditor, then auditor cannot inquire with management for any matter, nor he can amend the audit report. The auditor has approached you for a legal advice kind guide. So management is denying straight away that once the audit report is signed by the auditor, then auditor cannot inquire with the management for any matter, nor he can amend the audit report. But auditor is asking, okay, to amend the financial statement by disclosing a breach of loan covenant. So the auditor has requested the management to amend the financial statement, but management is saying auditor has no responsibility in this scenario. What do you say? What is your opinion, guys, on this? Come on. What is your opinion on this? Anyone? No? Very good, Abharakesh. Yes. What else? If management does not agree to amend the financial statement, what you will do? Let's say management does not agree to amend the financial statement. What you will do? What you will do if management is not ready to amend the financial statements, but you identify this is something that requires amendment? What you will do? Come on, guys. We have discussed this just now. So there are two things. One, as you correctly said, management is incorrect. Rakesh, as you said, management is incorrect. Yes, management is incorrect. Auditor has the right to discuss the matters which are after the date of audit report, but before issuance of the financial statement, if they are significant event, means events that have a linkage to the previous year and they require some adjustment. Okay, they are significant events. And if these significant or adjusting events are there, which have come to the knowledge of the auditor, okay, then auditor is required to inquire with the management, ask the management to amend the financial statement. If management is not agreeing to amend the financial statement, then ask management, do not circulate the audit report that you have already signed to other stakeholders. So ask management to stop issuing the audit report. If still management issues the audit report, then consider or seek the legal advice to prevent management from circulating the audit report. But as an auditor, your responsibility is to ask and request management to not to circulate the audit report. Till the time management doesn't amend the financial statement and you do not issue a amended audit report on that. Clear? Any doubt? Any doubt till now? Okay, great. If no doubts, then let's take a quick 10-minute break. After the break, we'll gather back and continue the session. Thank you. Back. So let's continue the discussion and some more questions on this. Okay. So there is one more another good question that I have. During the audit of Phone Network Limited, okay, the auditor of the company identified that the since last 3 years of the company is making cash losses and is facing liquidity crisis. Moreover, there was a huge loan installment due for repayment in next 3 months. After after closing of financial year in one of the litigations, the adjudicating authority issued an unfavorable and unappealable order against the company, because of which the company was now required to pay huge fine and interest to the government authorities. The amount of fine and interest there on was half of the annual turnover of the company. So this is something required to be noted. Half of the annual turnover of the company is the amount of fine and interest. Considering the company's profile, liquidity profile, it was evident that the company will default the upcoming loan installment and the payment of fine and interest thereon. So that is evident that there is going to be a default. When inquired with the management as to how they will deal with this situation and how they will consider the impact of these events on management's assumption on going concern, the management contended that the company will raise more funds through issue of fresh equity in the primary market to manage the liquidity requirements. So what company is saying? That they will raise more funds through issue of fresh equity in the primary markets to manage the liquidity requirements. However, after analyzing SEBI's relisting requirement, it was evident the company was not in position to issue fresh equity in primary market. So this is also a concern that auditor analyzed the SEBI's requirement, listing requirement, and it was evident that the company was not in position to issue fresh equity in the primary market. As a result, now As a result, the auditor of the company decided to draw attention of the users of the audit report on the existence of material uncertainty related to the events that have casted significant doubts on the entity's ability to continue as a going concern by disclosing the same in other matter paragraph. As an engagement quality control reviewer, guide the auditor about the correct way of disclosing the existence of material uncertainty related to the events that have casted significant doubts on the entity's ability to continue as a going concern when the management has not made appropriate disclosures of material uncertainty in the financial statement. So you understand the whole issue now. There were cash losses, there were issues, company didn't have any amount to pay on the litigation, company will default the loans, will be not able to pay the interest and fines. Okay. So default the loan, upcoming loan, and installment and payment of fines and interest thereon. Okay. Company was saying that they will raise more funds, but SEBI listing requirement is saying something else, that company is not able to raise the funds. Now, how will you report the matter in your audit report? The question is how you should report the matter. Come on, guys. How you should report the matter. Come on, quickly. How you should report this matter. Anyone? As a main qualification, not in other matter paragraph. Very good, Rakesh. Yes, good. What else? Anyone else? Students who have joined recently, what do you think that should be the appropriate way of reporting the matter? First of all, first question, do you think there is a material uncertainty? Do you think there is a material uncertainty? Yes, no. Yes, okay, good, very good. Do you think the use of going concern assumption is appropriate? Okay, no. Anyone else? Do you think the use of going concern basis of going concern basis assumption is appropriate for accounting? No, yes, what? So, see, the use of going concern basis of accounting is appropriate. I'll tell you why. Because as of today, we have a material uncertainty, but company has plans in place that they will raise more funds. Okay. It's a professional judgment to determine whether there is a the use of going concern assumption is appropriate or not. Okay, because I will see more plans. What the company has a plan. What company is thinking about. Okay, what company will do in this scenario. Although I am sure that there is a material uncertainty, but if it's a worst case scenario that there is no door open, there is nothing available, then only I will comment that okay, the going concern basis of accounting is not appropriate. Means the SEBI has denied that you cannot issue fresh equity, or all the other doors are closed, everything is closed. Now company has filed for the bankruptcy. So company has filed for the bankruptcy. So that is certain that company is going to get closed. Then I can say okay, the use of going concern basis of accounting is not appropriate. As of now, there is a material uncertainty, but I still may feel that the use of going concern basis of accounting is appropriate based on the professional judgment. Okay. And once I do that, I need to understand whether management has disclosed the same in their financial statement or not. Whether management has disclosed the use of going concern basis of accounting, okay, or disclosed these material uncertainty related issues in their financial statement or not. So management should have disclosed the material uncertainty in their financial statement. That is part and that is required to be disclosed as per the applicable financial reporting framework. Now, if the relevant disclosures are missing from the financial statement, if the relevant disclosures are missing from the financial statement, that means the reporting presentation disclosure is not as per applicable financial reporting framework, means a qualification or an adverse opinion, depending upon the nature, okay, and the pervasiveness and materiality of the disclosure missing. Based on that, I will issue my opinion. And in these kind of cases, if the material uncertainty is of such nature that it will totally change the perception of the user that reading the financial statement, I will issue an adverse opinion, not even qualified. So, as an auditor of the company, I should qualify or issue an adverse opinion in this regard because management has not disclosed appropriately the material uncertainty in their financial statement that they were supposed to. Clear? Any doubt? Any doubt? No? How many of you guys have went through the study material and tried to solve the questions from the study material? Study material also contains very good case studies and questions. I'll take one from that, and it is very good question basically from the study material itself. Move and Fast Limited is engaged in the manufacturing of shoes and slippers and are located in Bahadurgarh in Haryana. Due to unprecedented rains in the area in the month of September 22, many areas of the town got inundated due to choking of severe systems. As a result of the above, the company's premises located in the town were also affected, resulting in damage of stocks. The company has lodged a claim with the insurance company for 1 CR, and the same is shown under the claims receivable as on 31st March 2023. As the claim was not settled at the year end. So claim was not settled at the year end. So this I will highlight. Now, the insurance surveyor appointed in the case submitted a report to the insurance company recommending a claim of 45 lakhs in the month of April 2023. So March 2023, there was 1 CR, but in April 2023, the surveyor has said, no, it's 45 lakhs only. The company also gave its consent for the same and settled the amount of 45 lakhs and was transferred to the bank account of the company on 15th May 2023. You have just finished perform substantive testing procedures by the end of May 23. Is there any responsibility cast upon you as an auditor of the company in the above situation? So you need to tell me what is the auditor's responsibility or your responsibility if you are the auditor, okay, in this scenario. What you will do. Come on, guys. Come on, guys. So what do you think in this scenario? Okay. So ask management to make the correction in financial statement with respect to the provision of the recoverable claims. Very good. Yes. What else? Anyone else? Anyone else? Okay. So basically understand that in this scenario, what is happening is, okay, so there was an fire, also there was an, a rain because of which the inventory got damaged and they filed an insurance claim for that. Now, insurance claim amount was basically 1 CR as on March. But now the same insurance was settled at 45 lakhs rupees in the April month. As a result, there was a less amount that was settled. But on 31st March, you have already shown a receivable of 1 CR. Okay. Now, because of the difference that has been shown and because of the, amount that is over-reported at the end of March, so indication was there. This is a subsequent event which has happened, which is related to the event that has already happened in the past. As a result, what is our responsibility to do over here? As an management responsibility, management is required to make these amendments in the financial statement, because this is the event before issuance of the audit report. And for the events before issuance of the audit report, I am required to verify those events, and I am required to suggest management, please make amendment in the financial statement accordingly. And if management is not ready to make such amendments in the audit report, then I will, issue my audit report accordingly. Then I will issue my audit report with the qualification or with adverse opinion accordingly. Are you getting my point? It is a case of the subsequent event which is happening before the date of audit report, but after the financial year close. Remember the timeline? So on the timeline, we had variables, various dates. This is financial year close. This is my date of audit report, date of financial statement issuance, and then the rest of the period. Now, this event is after the financial year close, but before the date of audit report over here. And for this, I am required to perform procedures. This is my responsibility. And I should ask management to amend the financial statement to reflect the correct position. Because by the end of the March, or by the end of the May, okay, where I'm doing substantive testing, I have already received the 45 lakhs amount in my bank account, which is on 15th of May. So the amount has been received. Insurance claim has been settled at 45. So reporting 1 CR is not appropriate. Are you getting my point? Can you give some example, Abhirakesh, which dates you are referring to over here? Like which dates you are like missing dates you are saying? Which are the dates you are referring over here? See, over here in the question itself, you have a timeline. Okay, so the claim was registered in March, payment was done in May, settlement with the surveyor was done in April 2023, and you are closing your substantive testing by end of May. So you already have a timeline in the question. Now, if your question is if you don't have these dates in the question, or if you don't have a clarity on the dates, if you don't have a clarity on the dates, you need to write answer in a such a way that, okay, if the event is before the issuance of date of audit report, then what could be the procedure? Or if the date is after issuance of the audit report, then what will be the procedure? Are you getting my point? Accordingly, you need to tweak your answers, and you need to provide your answers in such a way that, it is applicable for both of the scenarios. Or you have to specify, if this is a scenario, then this. If this is a scenario, then that. Any doubt till now? Any doubt? No? If no doubts, shall we proceed to the next lecture, next chapter? Chapter number 7. Very, very important chapter. Very important. When I talk about this chapter, it is about reporting. When it comes to reporting, it's SA 700 series. SA 700 series. 700, which specifies the audit report format. 701, key audit matters. 705, your adverse opinion or qualified opinion or modified opinion. Okay. 706, EOM, OM paragraph. 710, 720. Okay, your comparatives, comparatives numbers and corresponding figures. And 720 goes to your other information. So this is SA 700 series. If you want to, learn in a way like, okay, 700, like when I talk about 700, you can say unmodified opinion, UMO. Okay. 701, which becomes KAM, CAM. 705, it becomes modified opinion, MO. 706, emphasis of matter paragraph, EOM. Okay. 710, I call it comparative information, CI. And 720, it is other information, OI. So this is how you can, short form you can learn UMO, CAM, MO, EMO, CI, OI. By this way, you will be able to learn the whole 700 series in a short form. Okay. So when I talk about 700 series or reporting part, so these are the essays, 6 essays which are covered under this particular chapter. And we'll see a quick summary of these essays and then we'll move to the questions. I have a very interesting questions for this particular chapter. So let's start with essay 700 series, essay 700. Now, when I talk about essay 700, again, understand it's basically, forming an opinion on and reporting on the financial statement. The primary essay which talks about how to draft your audit report, which talks about what is the auditor's responsibility, what is the auditor's, content of the what should be the auditor's report content, the basic essay or the structure which defines your audit report, kind of, you can say. Now, the objective of the auditor is to express opinion based on the evaluation of the misstatement or the conclusions, okay, that have been drawn from the audit evidence. So the objective of auditor is to form an opinion, issue opinion, express opinion. Okay. Now to do that, I need to write a report and present my opinion. I cannot give a verbal opinion. I cannot express a verbal opinion. But when it comes to writing, I need to be careful. I need to make sure that I am writing and including all the relevant details. If you want to learn audit report or summarize in a short form, it is here. TAAB, GCO, MRAR, CC, SPD. Okay. So kind of in a short form, I have summarized everything. What should be there in the audit report? TA is a title and address, the first part of the audit report. And that's why these are, I have divided in a parts. TA, AB, GC, GKO. That is, TA is a title and address. AB is the auditor's opinion and basis of opinion. Okay. GKO. GKO is an optional part. That is, if they are applicable, like going concern related paragraph, key audit matters paragraph, and other information paragraph, SA 720, JKO. Then comes MRAR. Pretty simple. Management responsibility, auditor's responsibility. Then comes CC and SPD. Okay. Now, if you talk about CC, it's the, if applicable, then the component auditor. Like component audited by component auditors and communication with those charged with governance. And the last part is your SPD, signature, place, and date. This is the whole audit report. Simple. Title, addressee, audit opinion, basis of opinion, going concern, CAM, other matter paragraph or accordingly, MRAR, auditor's management responsibility, auditor's responsibility, CC, component and communication, SPD is the signature, place, and date. And when I talk about auditor's opinion and basis of opinion, again, you have a what things are required to be provided in that. That is a EAT&P, that is entity. This FS has been audited. Identify the title of each FS, notes to accounts and period. That is something basic structure of the auditor's opinion. And when I talk about basis of opinion, it is AAIS. That is audit as per assay, auditor's responsibility, independence, and sufficient and appropriate audit evidence was obtained. This is something contained in the basis of opinion. So kind of, a summarized way I have created for you guys to learn and understand and remember the whole audit report. Okay. Then comes the going concern CAM, then the auditor's responsibility, then entities component audited by a component auditor, those communication with those charged with governance and signature place and date. So this is all of the audit report that is required to be drafted. Any doubts till now on this one? This is pretty much simple. There is nothing much difficult over here. The requirement to form an opinion is to follow the rest of the standards, like perform the risk assessment as per SA 315, obtain sufficient and appropriate audit evidence as per SA 330. Financial statement should be as per applicable financial reporting framework, disclose accounting policies, estimates are reasonable by management, SA 540. Okay. Information is relevant, comparable, reliable, and understandable, RRCU. That is relevant, reliable, comparable, and understandable. Then adequate disclosures, terminology, titles should be there. And FS, if drafted as per the fair presentation framework, then fair disclosures should be made. Now, there is one important area in SS 700. That is supplementary information. Means that information which is not required by applicable financial reporting framework. If there is an information which is not required by applicable financial reporting framework, which is presented with the audited financial statement, okay, which is presented with the audited financial statement, which cannot be differentiated with the audited information and that supplementary information. For example, management calculated ratios, future forecast, or something like that, which is not audited, but it is presented along with the financial statement, audited financial statement. And it is not clearly differentiating one. Like, when people will read, they will get confused. Okay, this is part of financial statement. So it is also not clearly differentiated. In that case, ask management to differentiate. If management does not differentiate, it refuses to differentiate, then identify that information and explain in the audit report that this is unaudited and this has nothing to do with the financial statement or applicable financial reporting. Clear? Any doubt? No? No doubts? Okay. If no doubts, let's quickly check up one more standard, that is 705. We can then pick up some questions and then we'll take more standards. Okay. SA 705. Why I'm taking 705 directly after 700? Because it is linked with 700. Now, SA 705 talks about modified opinions. Now, there can be three types of modified opinions. One is a qualified opinion, one is an adverse opinion, and one is a disclaimer of opinion. When I have to issue a qualified opinion, when I have identified a material misstatement, again, material misstatement is there. Okay. But the impact is material, but not, but not pervasive. Okay. So if I say, let's say, for example, I'll make a chart over here. Material and pervasive. Material, but not pervasive. Okay. Not material and not pervasive. Some people say this fourth part, that is pervasive, but not material. This doesn't happen actually. This part doesn't happen. Reason because to be a misstatement, to be pervasive, it has to be material. So the fourth part doesn't usually come up. Okay. So now, if the misstatement is material and pervasive, both, It is either adverse or disclaimer of opinion. If it is not material, not pervasive, then I will not issue even a qualified opinion. It will be unmodified. Okay. But if it is material but not pervasive, then I will qualify my audit report. So qualification will be there, but it will not be an adverse opinion. So this is how it is structured. Material pervasive, then adverse or disclaimer of opinion. Material but not pervasive, you may need to qualify. It is not material, it is not pervasive. Either it is very small of insignificant amount, or it is something which is not there. In that case, unmodified opinion. This is how it is structured. Clear? So I need to understand what opinion I am required to issue based on the evaluation of the misstatement. Now, what is pervasiveness? When I'm talking about pervasive, what is pervasiveness? What do you mean by pervasiveness? You guys might have seen my lectures or might have gone through the study material. Can anyone tell me what is pervasiveness that I'm talking about? Anyone? Okay, good, Abhirakesh. Yes. Spread effect of transaction. Yes. Okay, could be one. What else? Apart from this. Apart from this, what else could be there? Come on. What do you mean by pervasiveness of a misstatement? A very important question, because this is a basic. This helps you to define whether a particular misstatement is material and pervasive or is only material. Materiality, material, we understand. Okay, this is based on materiality. Fine. What is this now? Pervasiveness. Not affecting at large. So it's contradictory, Rakesh. A spread effect or not affecting at large. Both are contradictory. Anyone? Okay. So when I talk about pervasiveness, I'll explain with an example to you guys. Let's say I have an issue or misstatement in AR, that is fraudulent sales. Now, because of this, the AR is misstated by, let's say, rupees, you make it 100 CR. AR is misstated by 100 CR. So this is a material misstatement. But the impact of this 100 CR, it's on the AR side. See, this is the AR balance due to fraudulent sales. But this is something, which is also impacting my sales, my profit. Now, it could be the scenario that, okay, this is not the only fraudulent sales I have reported of 100 CR. There could be much more fraudulent sales in the financial statement. Let's say I identified the total fraudulent sale of rupees 200 CR. Now, this 200 CR will impact my profit. So my profit is overstated by 200 crores. Now, in absolute terms, this may appear material, but I cannot comment on the pervasiveness. Till the time I have only just one figure. So before this adjustment, my profit was 15 crores. Profit before adjustment. Now, if you compare these, then you can understand it is a substantial portion, although it is material, but even being after material, it is a substantive portion. Okay, materiality is one thing, but if that misstatement, which is material, is having impact on the majority items of the financial statement, or is of substantial nature, that is, it's a large portion of your financial statement, substantial portion of your financial statement, in that case it will be pervasive, or it is, if it is impacting the user. Understand that, it is fundamental to the understanding of the user of financial statement, then it is pervasive. For example, a company who is, who is more into inventory and, more into, providing goods, kind of a cold storage or a warehouse, okay, dark store. Now, if an entity has multiple dark stores across the locations, and if I say inventory itself is not appropriate, then inventory could be a substantial portion for that particular entity, because that entity is based inventory based entity. So I need to understand what is the misstatement, how that is impacting the other areas, and whether that makes a substantial portion or not. If yes, then yes, it will be pervasive for me, otherwise it will not. Are you getting my point? Yes, no? Any doubts on this? Once you issue a modified opinion, which is either qualification, adverse, disclaimer, you need to specify in the audit opinion, you need to change the heading of basis of qualified opinion. Like, basis of qualified opinion or disclaimer of opinion or adverse opinion. So the title will also change along with your content. Same with the opinion. Usually we write as an opinion, auditor's opinion, then we write qualified opinion, adverse opinion, or disclaimer of opinion. So the title will change accordingly. Now, the last and very important part. Qualifications are not required to be reported, or should not to be reported rather, should not be reported in key audit matters. Understand that. Key audit matters is not a substitute for qualification. Okay, so key audit matters is not a substitute for qualification. It's a separate requirement that we will see. Any doubt till now? Any doubt? Any doubt, guys? No? Okay, let's proceed to the last one of the, before we take questions, one last essay, that is essay 706. So 700, 705 and 706 together we will take the questions. Okay, essay 706. Now, what is essay 706 about is, it's an emphasis of matter paragraph and other matter paragraph in the independent auditor's report. So essay 700 will apply. So requirements of essay 700 will apply, but over and above that, these two essays 705 apply as accordingly, and 706 apply as accordingly. Now, what is 706 about? 706 talks about emphasis of matter paragraph and other matter paragraph. Before I proceed to the emphasis of matter paragraph and other matter paragraph, can anyone tell me what is emphasis of matter paragraph used for? For what purpose emphasis of matter paragraph is used, and for what purpose other matter paragraph is used? I hope you guys have already seen the lectures, and I need answer from your side. So I need answers from your side. I hope you guys have already gone through the lectures. What is the difference between emphasis of matter paragraph and other matter paragraph? No, Abrakesh, these are not qualification paragraphs. No. Come on, guys, come on. Okay, let me explain them. Basically, I'll bifurcate in EOM and OM. EOM, when I use it, when when I want to, okay, draw attention, or means attention of the users. So it is fundamental to the user understanding, okay, and it is of such importance that I want to draw users attention on that, so that user can understand financial statement more clearly. So there are two things here. First, draw attention. Fundamental to user understanding. Understanding of what? Understanding of financial statements. So if I want to draw attention of the users, and that is fundamental to the user understanding, in my judgment, in auditor's judgment, it is of such importance that it's fundamental of the user understanding of the FS. Okay, then I will use EOM paragraph. And that is, when I say FS, means very important part, already disclosed in FS. The point that I'm bringing attention of the users to should already be disclosed in FS. We call it, I'll just give you a short form for this. We call it emphasis of matter paragraph. But this E not only is on for emphasis, this is for existence. Existing means existing matter, which is already existing in the financial statement. Although we call this, the name of this particular term is emphasis of matter paragraph. But you can also understand that E stands for existing and M stands for matter. So existing matter in the financial statement, kind of EOM. Okay, emphasis of matter paragraph is for existing matter in the financial statement. Okay, when I talk about other matter paragraphs now, other matter paragraph, I consider it necessary to communicate. Okay, so here it's not about drawing attention. It is necessary to communicate. Okay. Now for what I need to communicate? I need to communicate uh, like to users. I need to communicate to users about audit, auditor's report. Okay. And or you can say or auditor's responsibility. So I'm thinking it is necessary to communicate to me as an auditor. I think that it is necessary to communicate to the users, okay, about the audit, auditor's report, or auditor's responsibility. The matter is of such importance or relevant that it should be disclosed to the user, okay, and it is about the audit, auditor's report, or auditor's responsibility, and this matter is other than FS matter already disclosed. So that is the other matter paragraph used for. When I think in my auditor's judgment, it is of such nature that it is necessary to communicate, okay, to the user about audit, auditor's report, or auditor's responsibility, and the matter is other than the financial statement matter already disclosed, then I will use other matter paragraph. Now, you can also learn that this O is for other than FS. Other than FS matter. Other matter paragraph or other than FS matter paragraph. You can, just a short form for you or, kind of a way to learn the paragraphs. Like EOM, existing matter of the financial statement, OM for the other than financial statement matter. Okay. Now, based on this, I need to decide which paragraph I need to use. Already disclosed financial statement, related to financial statement, EOM. Related to audit, auditor's report, auditor's responsibility, other than the matter which is reported in the financial statement, OM paragraph. But both should not be used for qualification. Simple. Both should not be used for qualification. Means if you want to qualify, if you want to issue adverse, if you want to write any qualification, do not use EOM or OM paragraph. Strict no. Okay? Clear till now with me? So this is EOM or OM paragraph. Now, if any matter which changes the format and content of your audit report, like if you want to add EOM paragraph or OM paragraph, in that case, communicate the details to those charged with governance before, okay, so that they can review, they can, suggest and they can discuss on that. So communication with those charged governance for OM and EOM paragraph is necessary. Any doubt till now? Any doubt? No? If no doubt, let's take a question then and discuss further on the questions. Okay. XYZ Limited, involved in the hospitality business, appointed Charan and Karan Associates as their statutory auditor for financial year 22-23. Management of XYZ Limited, while drawing up the financial statement for the said period, decided to add the following statement after the statement of cash flow as a supplementary information to be presented with the financial statement. No specific mentions or labels were added to the statement. to present that this is a supplementary information. Now, this is the information. Okay. Like total bookings, FY 21-22, average revenue per booking, FY 21-22, ratios, booking ratios, FY 21-22. Okay. So they have given some information. Kindly guide the audit team regarding the requirement of SA 700 with respect to supplementary information presented with the financial statement. Now you tell me what should be the scenario over here. What is the responsibility of the auditor and what auditor should do? Simple. Pretty simple, straightforward. There is nothing much difficult over here. Pretty easy question. What auditor should do over here? Come on, guys. I'm expecting a lot of answers because this we have discussed just now. Come on, quickly. What auditor should do in this scenario? What is the responsibility of the auditor over here? Come on, guys. What is the auditor's responsibility over here? Anyone? You guys also can speak. If you have, if you want to answer, you can speak, guys. Unmute yourself and you can answer the question. No? No answers? Okay. So, in the current scenario, what auditor should do? Basically, understand first of all the requirement of SA 700. The requirement of SA 700 is that no supplementary information should be presented with the financial statement in such a way that it appears the part of the financial reporting or part of the financial statement as per the applicable financial reporting framework. So this will be misleading. If I present supplementary information which is not required by applicable financial reporting framework along with the financial statement, then it will be misleading because people will think that this information is required to be presented with applicable financial reporting framework information. For example, if I add some different kind of statements with the P&L, let's say balance sheet, P&L, or some different statements like projected P&Ls along with the P&L. So I have a statement of balance sheet, okay? Then I have a statement of P&L. Then I have a projected P&Ls for 5 years. Then I have some other information statement, then cash flow, then changes in statement of changes in equity, and then other information. What people will think is the company is required to present the projected financial statement along with the normal financial statement as a part of applicable financial reporting framework. Means they will understand that this is an audited information. But in actual, it is not. But in actual, it is not. So, as the auditors, as the auditor of the company, it is our responsibility first to identify supplementary information. Okay, I call this particularly is identify supplementary information, then separate supplementary information, separate it out totally. Okay, and if not possible to separate it out, then mention this is not audited report or this is not audited information. So report supplementary information. So if I talk about the steps, it is simple. First is ISI, then SSI. If SSI is not possible, then RSI. Simple. If SSI is not possible. 3 steps, nothing much. Simple, straight way to learn. Quick learning. Identify supplementary information. Separate supplementary information. If separation is not possible, report supplementary information in your audit report. Very good question. Very good question, Abrakesh. And I was about to ask this to the larger audience. Where you will report. The last part is the report supplementary information where you will report. Come on, guys. Where you will report. The supplementary information. That this is not part of the audited information. Very important question. Anyone? Where will you report in your audit report that this is supplementary information not separated by management? Management has not, disclosed this separately. I'll tell you. See, now if I disclose this information, supplementary information, okay, under EOM paragraph, then it will be wrong. Reason because EOM paragraph is used for any information which is related to the financial statement. And I'm saying this is not part of the financial statement. Understand? EOM is used for any matter which is significant to the user understanding relevant to the financial statement. And if I disclose this matter in the EOM, this will become part of financial statement and I don't want that. Okay. For me, this should not be part of financial statement rather. I'm saying opposite, that this should not be financial statement. And if I report in EOM, this will become part of financial statement because EOM says that matter which are already disclosed in the financial statement, that should be there. Are you understanding my point? So in such a scenario, what I need to do is I need to report this particular supplementary information. Okay. This particular supplementary information you can identify, you can, in my opinion, I can, just specify somewhere this is a supplementary information and we are not audited, or in your auditor's responsibility. Okay. You can identify the supplementary information and you can say that, okay, this is not audited. Simple. So I have to define this particular area and I can use other matter paragraph also because this is related to my audit. So I'm not audited supplementary information. I can use that also. So when you are drafting your opinion, you write, remember in our opinion, when we were discussing our opinion, I'll just show you. SA 700, when we were discussing about our opinion, identify title of each FS. Over there, I need to specify that this particular FS or this particular statement, which is a supplementary information, is not covered by my opinion. So identify title of each FS which is covered by your opinion and which is not covered by your opinion. Same way, I need to specify this in my auditor's responsibility, or I can add another matter paragraph also. If that information is big information, that okay, this is I have not covered in my audit report because this is supplementary information which is not required to be reported as per applicable financial reporting framework. Are you getting my point? So this is how you need to report supplementary information. Any doubts? Any doubts? Okay. If no doubts, then let's take one more question on similar lines. Uh, while conducting the audit of RAC Limited, CAR discovered a misstatement in the financial statement of the company due to the non-write-off of a huge trade receivable with an outstanding amount of 2 crores. The party in the question has fled from India and is now absconding. After reviewing the audit evidence, it was concluded by the auditor that there is no possibility of recovering the outstanding debt. Despite the matters being brought to the attention of the management, they have refused to correct the misstatement. As a result, the financial statement of the company show a profit before tax of 1 crore, which is incorrect due to the management refusal to correct the aforementioned misstatement. Materiality has been determined for the financial statement at 5% of the profit before tax. Comment with regards to the type of opinion to be given by CAR in the above situation basis on the provided information. Okay. Now you need to provide what should be the basis basis on the provided information. What should be the opinion to be given by CAR? Come on, guys. So again, the outstanding amount is 2 CR. The party in the question is fled. Okay. Profit before tax is 1 CR, which is incorrect. Now the materiality is 5% of profit before tax. What do you think should be the opinion to be given in this scenario? Okay, Abrakesh, good. Anyone else? Anyone else? No? Okay, let me answer this question. See, the amount in question in the current scenario is 2 crores, which is 200% of my profit after tax. Sorry, profit before tax, PBT. 200% of PBT. Now, if I write off the whole of the amount, the financial position will get reversed. Means what will happen is that earlier I was showing 1 crore of profit. Now I will show 1 CR of loss because 2 CR I will add up a write-off. So already it is 200% of PBT. What was my materiality? Only 5% of PBT was materiality. This is impact is 200%. So for sure it is material. For sure it is material. Now as it, if I reverse, it will reverse the position of my P&L. I will call this particular misstatement as pervasive also. The reason because it is substantial portion of FS. You can see by the profit before tax, I can easily identify this pertains to substantial portion of my financial statement. If my profit before tax is 1 crore, then booking a loss of 2 CR can impact my financial position tremendously. So it's a substantial portion of my FS. As a result, what I need to do? I need to issue adverse opinion, not the qualified opinion, because the misstatement in the current scenario is material and pervasive both. Are you guys with me on this? Yes, Shabra, guys.
Good morning, sir. This is true that it is eating away the entire profit and also giving a same amount of loss, but it is not going to last forever. I mean, so from next year onwards, their performance is not going to be affected, I suppose. So is it adverse or qualified?
So when I say pervasiveness, I need to check with the current year's statement and the financial position. Although there may be, in next year, they might have orders in their hand that in next year, they will earn more orders, they will earn more profit. That is perfectly fine. But for the next year,
Okay.
Not for this year. For this year,
Rakshesh want to ask something, I think.
Yeah, ma'am, I will ask.
Okay.
He's replying to my question.
Yeah. So basically, what will happen is that is the next year. So next year there could be another data there, which is absconding. There could be another scenario altogether different. So based on the next year's scenario, I cannot comment as of today. What I need to comment today, based on the misstatement, when I say evaluation of misstatement as per SA 450, I need to see current year's position. I need to see what is position as of now in the financial year for which I am reporting. And accordingly, I need to classify my misstatement, my opinion, qualification, or adverse.
Okay, so we restrict ourselves to year under audit.
Yes.
Okay, thank you, sir.
And if you, I'll explain a bit more. I expand on your query a bit more. Let's say if you see some issues which are recurring to multiple years, okay, not only restricted to current year, but multiple years, it may impact your going concern. Then you will question on that whether this is creating a material uncertainty or not. If a misstatement which is adverse today, but if impacting many years ahead, that will also result in going concern issue, material uncertainty, and accordingly, I need to, look into that.
Yes, but that is a total different, madam. That is a going concern issue.
Yeah, altogether.
But
yes, you were saying something.
Yeah, no, if it is affecting the years to come, then it's, going concern issue might be there. Now, what my question is for this issue, particular for this year only.
Yes.
So, I understand that we should adverse our opinion.
Yep.
Thank you, sir.
Any other questions? Anyone else would like to ask anything? No? Okay. If no further questions, shall we proceed to the next question?
Yes, sir.
So let me take up one more question on this particular same topic. Pretty simple. We will go with this particular, type of question only. Mr. H, the engagement manager team of High Audit Value Limited identified during the course of audit the following misstatements along with the respective account balances. So account payable, misstatement of 20 lakhs, account balances 40 lakhs. Account receivable, misstatement of 16 lakhs, account balance 35. Inventory, 25 lakh rupees of misstatement and balances 45 lakhs. Fixed asset, misstatement of 5 lakhs, account balances 25 lakhs. The performance materiality was fixed at 30 lakh rupees and overall materiality is 65 lakh rupees. Based on this, kindly guide the audit team regarding the forming an audit opinion. So which audit opinion will you form in the current scenario? Anyone? Pretty simple, straightforward. There is nothing difficult over here.
First three, uh, first three are qualified opinion. Fixed asset not
Okay.
required because materiality is of 30 lakhs. But of course, yes, that also because the total overall materiality is 65 lakhs. So for all items, it is qualified opinion.
Okay. Qualified opinion, you're saying. Okay, fine. Anyone else with any other answer? Anyone else? Okay, I'll explain. So basically, in the current scenario, what is happening is, if you see my total misstatement over here is 20 plus 16 plus 25 plus 5, which comes to 65 lakh rupees. Oh, 66 lakh rupees, which is, more than my overall materiality. Now, if anything is more than your overall materiality, okay, then for sure it is going to be a modified opinion. Qualification is going to be there if it is more than performance materiality or overall materiality. Now, understand the role of both materialities, performance and overall. Overall materiality is at your financial statement level, the overall financial statement materiality. When I talk about performance materiality, it is a lower level of materiality than overall, but which is at the item level, financial statement line item level. Means at the financial statement line item level, if anything is more than 30 lakhs, okay, then it would be, a very, very big issue for me for that. Or total at the financial statement line item level, items should not be more than 30 lakhs. So a lower level of materiality, okay, than the overall materiality. Now, when I cross my mark of misstatement more than overall materiality, means my financial statement at the overall level are misstated. Understand, the financial statement at the overall level are misstated now. Not at only the financial statement, one single line item level, but overall level. As a result, what will happen is that in this scenario, okay, in this scenario, my impact of the misstatement is spreading. It is at multiple places, not at a single place. I have a misstatement, accounts payable, accounts receivable, inventory, fixed asset. So the misstatement has an impact which is, which is spread across multiple line items. Multiple misstatements are there. So financial statement as a whole is misstated, and that's why I will issue an adverse opinion, not only qualified opinion. So my misstatement here will be pervasive because it is not restricted to only one line item. Plus, it is exceeding my overall materiality, which is set for the overall financial statement. So that's why it will be an adverse opinion, not qualified opinion. Any doubt, any questions?
Sir, only thing, I mean, in these account balances mentioned are after taking effect of misstatement, I mean, or should it be after, I mean, nullifying the effect of misstatement? What should we presume here?
you can see it will not make a difference if you presume after or before. I'll tell you why. See, even if you make a presumption that it is after taking the impact of misstatement, means still you have a misstatement in multiple line items. So the basis for me to say it's an adverse opinion, number one is in totality amount, which is exceeding overall materiality. Number two is presence of a misstatement in multiple line items. So even if the account balance is after taking effect or before taking effect, my opinion will be same. You can take any assumption, like both will be answer will come same.
Okay.
Any doubt? Any question, guys? No? Let's take quickly one more question to discuss. One important one. Difficult Books Limited was engaged in manufacturing of active pharmaceutical ingredients. Due to change in the laws and regulations, every company engaged in manufacturing an active pharmaceutical ingredients would now require production capacity license, which will restrict the production of the companies. Management of the company assess the impact of the change in law over the financial position of the company and appropriately disclose the same in the financial statement. The audit team of the company evaluated the management disclosure and found it appropriate and sufficient. However, considering the said matter as the most important to the fundamental of the user understanding regarding the financial statement, the audit team decided to disclose the same in other matter paragraph. You as an engagement partner of the audit team is required to guide the audit team. So, do you think this particular disclosure is appropriate and fine? Anyone? What do you think? This disclosure is appropriate and fine, or some changes are required?
Disclosure is not complete. I mean, so some change. I mean, financial facts also required to be disclosed. So as an auditor, we can either insist for change in FS, or if they are not ready, then we should mention this in our EOM.
No, but just see over here. The management of the company assess the impact of the change in the law over the financial position of the company and appropriately disclose the same in financial statement. So I will assume everything is disclosed appropriately in the financial statement.
Then it should be not in OM, it should be in EOM.
Very good. Yes. So absolutely correct, Rakesh. And can you just tell me the reason why you will say EOM, not OM? Like the background reason for that?
Because in EOM, the matters to be disclosed, I mean, required to be mentioned is of towards financial statement, and the notes to account is part of financial statement. So it should be in EOM.
Absolutely correct. Absolutely correct. So in EOM paragraph, what I refer, see, remember I discussed that EOM is something existing matter of financial statement. I need to use EOM for the existing matter of financial statement. Management has appropriately disclosed in financial statement. So this is an existing matter of financial statement. That's why I will use EOM paragraph, not OM paragraph. OM paragraph on the other end is for audit, auditor's responsibility, and auditor's report. Okay. So if anything is related to audit, auditor's responsibility, and auditor's report, which is again not in FS, it should be not in financial statement, then I will use other matter paragraph. Clear? Any doubt till now? No? Okay, so considering the time limit, we'll keep till here, guys, if no further doubts. In the next lecture, I would like to complete the rest of the SA 700 series. I'll be taking some questions on that. Okay. I want you guys to please go through the lectures that are already there uploaded on the portal. Please go through the lectures so that I can quickly cover the rest of the SA 700 series questions, and then we'll start with the rest of the chapter 8 and 9 again. Okay. And please provide your feedback. That is really, really important for us to understand if you need anything further, if you need any change, or if you need something else from our side. Okay, guys. If no further questions, then thank you, guys. Thank you for joining the session. I'll see you in the next class.
Thank you, sir. Thank you, ma'am. Thank you.
Thank you, students. It would be great if you study and you can ask your doubts. Then the question will be more interactive and you will find very useful. Okay, and for that, I request you all, you practice writing, do writing practice as well. Set an examination condition and write the answer and be able to apply correct provisions. And whether you are able to analyze the situation and which are the standards applicable and how the conclusion should come and whether any important part is missing or not. So you, after writing, you analyze that. And for next session, again, we are having on 13th June, right, sir? Is it audible now?
Yes, ma'am, but your sound, voice is breaking a little, cracking.
Okay, so our next session is 13th June. So before that, we are doing very, very important topic, that is reporting. And reporting will be well equipped with all the remaining standards. So I request you all read all the standards carefully which are covered till now, and don't think the standards which are covered at intermediate level are not applicable for final, because in final all the standards are applicable. Okay, so cover all the standards and watch the lectures, recorded lectures, and do writing practice. And on 13 June, our next session is there. Hope that will be more interactive because you will be more prepared. With this, wish you all the best. Thank you, students.
Thank you, ma'am.
Thank you, ma'am.
Thank you.
Yes.
Thank you.